This is a key time of the year for US beer makers, with sales climbing 10% over the peak summer months. Despite that, many brewers and beverage makers are deeply concerned, and that includes Miller Coors, the second largest US brewing company. Last month, the Trump administration announced it would impose tariffs on steel and aluminum imports from 3 key US trading partners: Canada, Mexico and the European Union. The 10% tariff on aluminum led Miller Coors to warn the move could lead to higher prices and job losses.
Tariffs in general aren't great for any economy, but a tariff on a raw material is a little bit more difficult than on a product. When you put a tariff on a raw material, you bring in that raw material, what you do is you disadvantage tens of thousands of manufacturers who would use aluminum, for example, as a raw material input, because anyone who's bringing a product that has aluminum in it into this country would not have that same disadvantage. Also, anybody who exports to those countries would also be disadvantaged, and that's the real kicker there.
Since January 2015, aluminum production in the US has fallen by more than 50%. It means manufacturers will have little choice but to pay the tariff, at least in the short term, as the demand far outweighs domestic supply.
To underline the importance of aluminum, this production line produces 2.1 million cans of beer a day, and this is just one of 4 in Milwaukee alone.
Dali Yang is a professor of political science at the University of Chicago. He fears the US tariffs on metal imports will hurt a lot of businesses.
Businesses really hate uncertainty because the margins for beer manufacturers and others actually are fairly compressed. So they need to be very careful with this kind of input prices, especially at a time also when the labor market is highly constrained as well.
US aluminum prices jumped 26% in April and remain significantly higher than at the start of the year. It has led some manufacturers to call for a reform of the so-called Midwest Premium, a pricing system that is used for aluminum in the US. Weiner says the pricing system is outdated and punishes manufacturers.
I mean, for example, in the beer industry, I think every penny of, we'll call it artificial inflation in the Midwest Premium, which is where the tariff's being felt, it's worth about $40 million, or a cost of about $40 million just to the beer industry. If you look at the beverage industry and the rest of the United States, you look at autos, construction, you're talking billions of dollars. Is it worth it to save a few hundred jobs? I'm not saying that jobs aren't important. They are important, but you got to look at the whole economy.
In the meantime, brewers and other drink companies hope they won't be the ones stuck with the hangover once the tariff dust settles.